If you are looking for ways to protect your assets and optimize for global taxes, a Dubai trust might be the solution that you've been searching for. In this video, we'll explore how the trusts work, how they can help you with international tax planning, and what you need to know before setting up one yourself. We'll also discuss the 9% corporate tax and other key considerations that can impact your decision. Before we start, my name is Shiraz Vaid and I'm the founder at Lepidus Wealth. And I've helped many clients and families with trust and asset structuring in Dubai. So if you would like my help in registering your will in Dubai or setting up a Dubai trust or a family foundation, you can complete your application to work with us by clicking the first link in the description below. A Dubai trust is a legal structure created under the DIFC or ADGM framework, both of which are internationally recognized and based on common law principles. These structures let you, as the settler, transfer your assets to a trustee who manages them for the benefits of your chosen beneficiaries. Clients often choose Dubai Trust for asset protection, succession planning, and enhanced privacy. One of the main reasons that Dubai Trusts are popular is because Dubai itself does not impose personal income tax. This means that income earned by a Dubai trust within Dubai is generally not taxed at a local level. However, the situation is more complex when it comes to your home country tax laws. Most countries will tax their residents on worldwide income. This means that any income earned by the trust might still need to be reported and taxed in your home country depending on your tax residency status and the tax residency status of your beneficiaries. Dubai also has a 9% corporate tax which applies to the profits above 375,000 dirhams, that's roughly 100,000 US dollars. And this is another factor you need to consider. While the trust itself may not be taxed, any underlying companies or investments held within the trust will be subject to this 9% corporate tax. So effective tax planning requires a full understanding on how this tax could affect your trust holdings as well as overall returns. Dubai also follows the Global Transparency Standard, including the Common Reporting Standard or CRS, which means that information about Dubai Trust and related bank can be shared with tax authorities in your home country if you are a tax resident in that country. Trying to use a Dubai trust to hide assets is not only risky, but it also likely to fail in the long run. The best approach is to be fully compliant with all the reporting obligations and become a tax non-resident in your home country, if that's part of your plan. Even with these challenges, Dubai Trust can still be a powerful tool for your global tax planning. For example, they can help defer tax in some situations by retaining income within the trust until distributions are made. This can be useful if your personal tax circumstances are likely to change or if you're considering relocation. Dubai Trust also helps with the estate planning by ensuring a smooth transfer of assets to the beneficiaries, which can reduce inheritance tax in certain jurisdictions. For many investors and business owners, Dubai Trusts are an effective way to protect your wealth. A trust can shield your assets from creditors, business disputes, and potential lawsuits. For international business owners, a Dubai trust can also simplify the management of assets across different countries, giving you better control and visibility of your overall financial situation. A common question we get is whether Dubai Trust can help someone move from high tax country and become a tax resident in Dubai. The answer depends on your specific circumstances, including the residency exit rule in your home country. Some countries impose taxes or other barriers that make the process more complicated. While Dubai's 0% personal income tax and competitive corporate tax rates are attractive, you should always seek proper advice before making any big moves. Setting up a Dubai trust is not a one-size-fits-all purpose. Both DIFC and ADGM have their own rules and requirements, but each offers a solid foundation for creating a trust that suits your needs. Once you choose the right jurisdiction, you will need to appoint a qualified trustee. The trustee's role is to manage the trust asset according to the terms you specify. So it's essential to choose a trustee you can rely on. Compliance is another critical point to consider. Dubai trusts require proper record keeping and timely reporting. Failing to maintain accurate records or missing a required filing can lead to penalties or issues with tax authorities in other countries. That's why it's so important to work with professionals who understand both the Dubai trust regulations and your home country's tax system. Capital gains tax is another advantage where Dubai trust can be beneficial. Generally, Dubai does not impose a capital gains tax. However, capital earned by the trust could still be subject to tax in your home country. depending on your residency and other factors. This is why having a well-structured trust deed and a clear plan for distribution is so important. It helps you manage risk and maximize the benefits available to you. Another benefit of Dubai's trust is their flexibility. You can customize the trust deed to reflect your personal wishes, including how and when the distribution of assets are made to the beneficiary. This level of control is especially valuable if you have complex family dynamics or a specific succession goal. A trust can also be set up to protect families' wealth over multiple generations, which is a key advantage for many investors and business owners. If you are considering setting up a Dubai trust, it's crucial to think about how it fits into your overall financial strategy. Trusts can be a powerful tool, but only if they're part of a comprehensive plan that takes into account your tax residency, the tax treaties between your home country and the UAE, and your long term financial goals. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.